All right, I think this is recording. All right, so I'm gonna try to make this as simple and as concise as I possibly can. You will still need help and experience and all that good stuff. But here we go. So I've learned a lot over, I think I've been trading now for 5 years, and I can say I'm a profitable trader now. All right, so things I wish I'd known. Number one, you need an edge. So, edge. You need an edge. Psychology doesn't matter. Um, Technical analysis doesn't matter. How much money you have doesn't matter. None of these things matter unless you have an edge. An edge is just a statistical advantage of something happening over another. Like an example, the casino has an edge, the house has an edge, which is why they always come out profitable. An edge could be as simple as if I had a coin that was heads or tails, and let's just say I have a 51% chance of it landing on tails and a 49% chance of it landing on heads. And every time I flipped the coin and it landed on heads, I made $2. And every time it landed on tails, it made one. I lost $1. So over time, I would make money if that makes sense. So you need an edge that's at least 50%. I would say more, 51% or more. So that means for every two trades you take, you should win one. Now, this is obviously you need a sample set, not just two trades. But all right, so edge, and I'll show you my edge at the end of this video series. But for starters, I wanted to start with that. You need an edge. If you can't write your edge on the back of like a business card, it's too complicated. You don't have an edge. You need something simple that's easy and repeatable. That's all you want is a repeatable pattern that presents itself in the market day in and day out. And all you do is execute on that each day. You go home. That's it. All right, so um, let's start with market structure. So, market structure. Um, Market structure is just basically highs and lows, and higher highs, higher lows, lower highs, lower lows, that kind of stuff. So, we have swing lows and swing highs, essentially. So a swing high is a three candle pattern. So if I use this indicator, one, two, three. This is a swing high. This is a swing low. Each one of these arrows is swing highs and swing lows. To get a swing high, you need three candles, and the highest point in those three candles will be your swing high. So like one, two, three. This is the highest peak, if that makes sense. Swing low, one, two, three. This is the swing low. Swing low, one, two, three. Swing low, one, two, three. There are no swing lows in here, but because as you can see, the candles keep going up. There isn't, but here is a swing low because it's the lowest between these two. So on a swing high, you need a high candle in between with two candles on, with a candle on each side that are lower. And for a swing low, you need a low candle and the two candles next to it are lower than this candle. So swing highs, swing lows. All right. So moving on from that, a couple different things. The market basically moves from support to resistance or resistance to support, or key level to key level, or points of interest to points of interest. Your different support levels. You've got what's called an order block, a fair value gap. Um, what else? Oh, and stop runs. So these are like your basic, and obviously highs and lows. So these are basically your, I would say, your range of support and resistance. So an order block. An order block is basically a candle that, this is a down candle. I should probably make these, I guess it doesn't matter. So my down candles are like this purple color. My up candles are these blue colors. So let's see if I can paint this out. So support and resistance. This candle right here is an order block. It's an order block because it's the last down candle before this up move. And this up move broke this high. So this would be an order block. So if I mark that off as a level of support, because support is below price, resistance is above price. So if I mark this off below, this would be support, because it's supporting price. It's supporting price. Resistance would be resisting it from going higher. So support, as you can see, it bounced. It got a nice bounce. It right here. This candle broke up above this high, which made this an important level of support. Price came back and shot up. It started here, rejected, and went up. Okay. So now order blocks happen on all time frames. Price is fractal in the markets, meaning the exact same thing repeats on every single time frame. Everything repeats. So within this order block formation, you will probably have on a smaller time another order block, and then on the smaller another order block. So that's what I mean by price is fractal. Everything happens on the same, on all the same thing happens on all the time frames. It's the same structure. It's the same everything. Which is why it makes sense to trade with higher time frames using lower time frames to get in. All right, so back to support and resistance. So this is support, and we can see it held and price shot up. Okay, let me see if I can find another order block. This order block. So if I look left, for order block to be valid, it needs to break a high or a low. So this push up broke this high. So if I look back, this would be the valid order block, but price didn't come back down there. So I'm gonna do it like this. be like that. But price didn't come all the way back down there. It just kept going. Let's see if I can find more order blocks. Hmm. I feel like if I went to like the hourly, there would be more order blocks. Okay, so let's try this one. So here's an order block right here. Price found support somewhere over here, somewhere left. It shot up. It broke this level here. So that means this is now a valid level of support. It's an order block. So if I did that, we can see price came in here and tested it and tested it and tested it, and then it had a big explosive candle out of there. And now this candle broke this level broke this level. So now this is the next valid order block. So guess what? Price came back and it blasted up. And we broke this level. So now, what will probably be our next order block? Maybe there. I don't know. It's just high probability that this would be the next support level. Let's see. Actually, add these days. Let's see if I can find any more. So price found support somewhere in here, and then it went up and it broke this level. So this should be a valid order block or valid level of support. Hits it, shoots up. Okay. This should be a nice level of resistance. The order block because it broke this level. Alright, so price broke this level, which means this would be a nice level of order block if we didn't get anything. Price broke this level, which means this should be a level to see if it gets held, but it does not, because as I said, we're just working with probabilities. That's it. So yeah, you got levels of support, levels of resistance. All right, we'll go more in depth into this. Our next level of support and resistance are fair value gaps, or we can just call them gaps. We don't even have to say fair value gaps. We can just call them gaps. So a gap would be, if I look, this would be a gap. See how there's a space in between. It's a three. Again, it's another three candle pattern. You have 1, 2, 3, and there's a big gap in here where price, it never came. This is open space. It never came back in here. So that didn't get retested. So, but that would be a level of resistance. Support. Sorry. Another gap. Another gap. See if a gap that got tested. Okay, here's a gap. So price broke this level, leaving this gap in this order block. So we've got two levels of resistance. So this gap, price comes into this gap and then blasts away. See, like price isn't gonna always come to this level of resistance, the order block. Sometimes it just taps the gap and then goes. Let's see, another gap. There's another gap here. Price comes into the gap, has a little bit of a, doesn't have a strong push away because this is also approaching the end of the market, or like the time in the market where there's no volume, or no, I guess another word from volume, no action. Nobody's in the market. Okay, see, another gap. So here's another order block. So we've got this, the last down counter before the up move. So this up move breaks out of this, breaks the swing high. So it leaves behind this level of support. Yeah, support. It's really this whole thing. Since this candle engulfed this whole thing, it would be that whole thing. So this is your level of support. Price comes down and then rockets up. Any more gaps? Here's another gap. Price comes down, fills the gap, not all the way, and then rockets off. Let's see. Any more gaps? Also, we broke this level, this swing low, so this should act as resistance. So you got resistance, you got resistance. So price spikes up and comes down, and then we try again, and this time we close above it. Well, we don't close above it, but we go through it, and so it's still holding. We come down again, it's still holding, we come down again, and then we finally burst through it. The more times a support resistance level is hit, the weaker it gets, I would say. So like this is it, 1, 2, 3, 4, 5, 6, 7, 8, and then the 9th time it just blasts through. Let's see. And then our next levels of support and resistance are what we call stop runs, or swing high, swing low runs. So meaning this is support, this is our resistance. Price spikes through it and then reverses, and then comes down. See if I can find another. Price spikes through here and then it rejects and then comes back down. Price spikes through here and then rejects and then comes back to it. It's like a fast move down. So those are your main support and resistance levels, I would say. I will make another video on them specifically. I'm trying to get as much of this first video as I can without overwhelming. Yeah, next thing is price only does one of four things. That's it. That's our little derivative. So it will, we call this, let's see, price delivery. This is how price is delivered. Price delivery. So When I say price is delivery, it's just how it moves, like its signatures. So price will either expand. It comes in phases. And remember, price is fractal, so it's doing this on all time frames. We can do a reversal. Equals retrace. Or it will consolidate. So these are the kind of the 4 things that price will do, or how price is being delivered, or how price is being, how it's moving, I guess. So an expansion would be this, how these candles went up. This is expanding up, expanding. See how this is expanding up, expanding up. Retracements would be, let's see, retracement. The price expands down and then it retraces. And then it expands again. Then it retraces. Then it expands. Then it reverses. So a retracement is just the pullback after the expansion to create another expansion. And reversals. So this is a reversal. So price went all the way down and then went all the way back up. That's a reversal. Price went all the way down, broke this level, and went all the way back up. When you have a reversal, price normally runs like a swing high or a swing low. So this swing low, price runs through it. Price runs through it and then comes back up straight through it. Now, if this was just a retracement, price would have did this. Price would have expanded, retraced, and then gave another expansion. So let's see if I can draw this. So expansion always comes, so we always start with consolidation. Then price will expand, then it will retrace, or retrace and expand again, or it'll reverse. So you start here, it will consolidate, expansion, retrace, expansion. Or it'll consolidate. It's always going to, expansion is always going to be the next phase after this. And after expansion, you can either get a retrace or a reversal. If it reverses, then it's going to be another expansion. If it retraces, it's going to be another expansion. So you would get, it would look something like this. So consolidation would be consolidating. Price isn't really doing anything. It's just kind of staying in one spot, like this area, right? This is consolidation. Let's just say it expands down. Big move down. Now, it will retrace and then give another expansion down. Or it will reverse, go past this, and just keep going. But now, if we retrace, if it is a retrace, then we should get another leg down. Now, if we get the expansion and it reverses, what you're going to see, the reversal is here, and then it's going to expand, and then you'll get a retrace for more expansion. These are kind of really the two, I guess those are kind of like pretty much the two things that can happen. Because it's not going to expand, and yeah. So um, I think that'll be it for this video. This was probably a lot and kind of confusing, but I'm going to try to break all of this stuff down into separate videos.